Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and thanks for joining in and spending a little bit of your Sunday night with me. I hope everybody had a great weekend. I'm psyched to get the week started again. What we're going to talk about tonight are the economic data points that are going to be coming out this coming week. We'll talk a bit about the jobs data yesterday and how much influence that had on last week's price action, what it means for the future, and good morning, Cole. Oh, good afternoon. Good morning. I'm so used to doing swing trading today. Good afternoon or good evening, guys. The pre-clicker. Oh, that was URL, the like, even before I went live. Thank you. Appreciate that. So we're going to talk about the economic data points. This week we have the Fed coming out. I don't expect much there. We do have one headline. It's just, more of the same type of global crash stuff. I want to talk about the price of gold in terms that we usually don't see. Usually we talk about the price of gold in dollar terms, but we want to take a look at how gold is performing on a chart versus the euro, versus the yen, and it's pretty interesting stuff. And we'll just spend a couple of minutes there. Then I want to talk about Japan and the US dollar. So a lot to get to, and plus I have some symbols that have been requested of me to go through. So I'll go through those as well. And then at 7 p.m. Eastern Standard Time, the members intergroup private session. Folks, I already have the link set up. You might be able to see it in the pending on YouTube, the link, but I'll send it out anyway. And that should be really easy to go through. So I'll send out a link to members immediately following this commentary, and we will go live until about 6:30, 6:40, thereabouts. All right, let's do this. Put my eyes on here. Economic data coming out this week. We have nothing on Monday. The NFIB Small Business Index, that could move the market. That's a survey of small businesses. Unit labor costs, I don't expect much there. The CPI, Consumer Price Index, that's a measure of inflation at the consumer level. This is a rigged number. It's not the same CPI that we saw during the Jimmy Carter days. Completely different CPI. And we have, of course, again, Jay Powell, the Federal Reserve, coming out on Wednesday. We got to go through another press conference with him. And the entire post announcement is just one big drama show. I wish they would just stay quiet. Issue the announcement, give a statement, done. But they refuse to do that. Too much transparency is not good. Weekly jobless claims. On Thursday, we had the PPI, that's the producer price index. Are we seeing inflation at the producer level? And then on Friday, retail sales, a very important number, and business inventories to a lesser extent. So it's going to be a volatile week. On Friday, we had non-farm payrolls, and I like to call that the pimp Mac Daddy of them all in terms of economic data, and it is. And you saw that on Friday how the market moved, and it was a good report. I'm not gonna say it wasn't a good report. It was a good report. It was okay. It's not something that we haven't seen before. And yet Kramer, I heard, was saying it's the best jobs report ever, pumping up the market. Nothing could be further from the truth. During the Obama days, when we were recovering out of the and I hate to quote his presidency, but facts are facts. You saw 300,000 plus month job growth. So by no stretch of the imagination was this the best jobs report ever. It's ridiculous. And when you back out the returning workers, you drop down to 216,000 jobs created. That's good. It's not great. It's good. And I didn't point out the month prior we had a horrible number. That was because you had layoffs due to the strike. You don't want to cherry pick your reports. So all I'm trying to do here is just say level set. It was a good report. Not great. 1 month doesn't make a trend. Let's see if we can get these back to back and rising. Then I'll be more excited. Exactly right, RL. So again, good number, not great. Let's not get carried away. And the markets completely got carried away. And of course, the media, because they want to sell advertising, they pumped up the hype as well. And so much for them also pumping up the president as well. Yeah, and the ADP number, thank you, 40,000. Yeah, the ADP number was as you point out, was a huge miss. And from what I understand, the household survey, the government household survey was a miss as well. I don't have the data in front of me. That's just what I was told. I don't want to cite it unless I have the data in front of me. But the ADP number, rightly pointed out, was a horrible number. I didn't even go to it. I was just focusing on the government numbers because that's what sent the markets higher. So thanks for pointing that out, 40,000. Appreciate that. All right. So now that we have the economic data under our belts as we go into the new trading week, this is another, you're seeing more and more of this constantly, especially on zero hedge. I love zero hedge, don't get me wrong, but you get a lot of this. Is the global crash just around the corner? Central banks are cutting at the fastest rate since the financial crisis. It's a doom and gloom headline, but facts are facts. Is the Federal Reserve increasing their balance sheet, not QE? Are they increasing their balance sheet faster than they have in periods past? There's no doubt about it. It's a fact. Take a look at this spike higher. This is from September of this year. We're well back above the $4 trillion mark on the Fed's balance sheet. This is insanity. This goes back to 2010. But they don't want you to pay attention to this. Don't pay attention to that. Don't look at over here. Look at over here. The skewed numbers. Look at the skewed numbers that we're going to get on the CPI coming out next week. Don't look at gold breaking out, and they whack gold down in the back half of the week last week. They don't want that. The last thing they want is people looking at gold as a store of value. What they want you to do is keep money in stocks, keep the ride going, momentum going, and eventually, yeah, it will come to an end. But I'm not predicting that's going to be this week, maybe not even next month. After the election is probably when we're going to see it all happen. Now, the price of gold. I was out Friday night, and obviously Friday was not a great day for gold, the miners. It was a horrible day. Silver, even worse. And so I was out with a bunch of people, and one guy who I know from the business, and he's pounding his chest about how I was wrong on gold. And I said, do you know that gold is at highs versus other currencies? And he says, yeah, I do. I said, do you know which ones? And he couldn't say it. So I said, let me show you. Gold is at highs versus the Japanese yen, all-time highs. It hit a high, all-time high, back in August in euro terms. You can see we've since pulled that back, but we have clearly broken out to new higher highs. In US dollar terms, not so much. We're building that right side of a large cup. In Canadian dollar terms, all-time highs. By a mile, all-time highs. What else? Aussie dollar terms, by a mile, all-time highs. And the reason why I'm pointing this out is that obviously the strength of the US dollar has kept a lid on the price of gold. Hey, Tom. Yeah, and I'm going to go, you make a great point, Tom. And I'm going to go over a couple of charts that are kind of interesting with regard to the dollar. So let's go to it. And before I leave here, the only one that's nowhere near, actually it is building the right side of a base. This is the Swiss franc, and it is building a base as well. But you can see that in terms of all the other developed nation currencies, gold is at or near all-time highs, past the 2011 peak. 12 peak, I should say. All right, so let's get to why the dollar is interesting. And I'm pointing out the Japanese yen. I've been talking a lot about Japan of late because it's been ignored for such a long time. I figured as a contrarian, you know what? Start looking. And you could see here that the US dollar last week versus the Japanese yen flashed an outside reversal bar. This is a very, very serious break on the US. Actually, it hasn't broken yet. Let me preface that. It hasn't broken yet. But I think that in all probability that it will. Because this outside reversal bar is some pretty serious stuff. Let's throw some lines up here. And it becomes really serious if we get a continuation move lower. And for those who are betting that, actually we did break last week. Here's the value of your annotation tool. We did break last week. We broke a triangle formation, the lower band, last week, weekly basis. This is not a daily chart. It's not an intraday chart. So the Japanese yen is looking very strong relative to the US dollar as we proceed into the new trading week. So despite the fact that gold had a very poor week due to the jobs data on Friday, the stage is set for a rebound. Now, I'm not predicting that tomorrow morning gold is going to spike through the roof. I'm not predicting that. Friday's hit was serious, especially for silver. So ideally, we get a pullback on gold. Why do I say ideally? It's because on Friday, we sold covered calls on our NUGT position. I would appreciate the shares of NUGT pulling back. I discussed this on the week ahead commentary yesterday with members, with where I would be looking to cover that position, meaning scalp profits off of that covered call position. I sold the 29 strike price, and we brought in a nice premium on them. And those, we are in the money with them right now. We are profitable. And ideally, we pull back further tomorrow. We'll book those profits. And ideally, we see a rebound off of, I think it's the 26 mark for the price of NUGT. And we could look for a rally back. And we'll look to resell those covered calls into strength. I like to close out those covered call positions on weakness and then sell more on strength. And that's the game plan as we move into the new trading week. So watch Japanese yen. Here's the dollar. It was ugly. Remember on Thursday Night Futures Live, my wife tells me, stop pointing. Sorry about the pointing. On Thursday Night Futures Live, the dollar was trading down below this lower band of support. It did manage to rally back late on Friday. It was a good day on Friday. We closed slightly off the highs of the day, but the dollar had a good day on Friday. Again, all because of the jobs data. But I don't think this is going to hold. I think that you're seeing Stokes rolling over here. The trend on RSI is clear and defined. It is down. And so there's more lower highs here. We couldn't even rally back to retouch that primary upper band of support. So what I'm looking for here on RSI, the US dollar, is a break or at least a retest of the support level. I think the dollar is going to move lower. I think what you saw on Friday was shorts covering. And even when you take a look at the dollar in euro terms, or versus the euro, I should say, the euro, for all of their problems over there, the euro is setting up very nicely. This is a weekly chart. We were up last week. We closed off the highs of the week, but that was, again, due to the jobs data here. So what I'd be looking for is in fact, we broke out. We broke out here, pulled back. We're putting in a higher low now. You know, forget that. We'll do this. There you go. So a nice consolidation here on the euro. And if we break above and close, this only happens when I'm live. I swear to God. Let's make that solid. Good. All right, so what we have here is a view of the dollar versus the euro. And we are poised for a breakout. If we close above this upper band of resistance, we're going a lot higher. You can see that the Stokes and RSI are putting in higher lows. So the indicators are moving in the right direction. All you need is now follow through on price. And the dollar's in a lot of trouble here, especially if the euro breaks out. The euro makes up 55% of the Dixie, the dollar basket. It's the basket of currencies the dollar trades against. So if the euro is breaking out, that's a big problem for the US dollar, and the Japanese yen is the second largest component of that bucket. So if you have both the euro and the Japanese yen rallying against the US dollar, it means that the dollar's got a lot of problems. It's going a lot lower. Hey, Patrick, I grilled up it was the breakfast sausage. Patrick was good enough to bring me over a whole freezer load of deer meat he had shot. So I cooked up the breakfast sausage on the grill this morning with some chicken that I had. That's some god darn good breakfast sausage. That butcher's really, really good. It was fresh meat. It was delicious. And I have it saved up for the remainder of the week. So when I cook my egg whites, I'm going to chop up some of that sausage and throw it in there. I'm digressing here, but thank you very much. Say hi to Amy for me, please. Thank you. All right, Tom. Gold will, when the dollar takes off, currencies, the dollar is going to go a lot higher. Yes. Hammer on the TNX daily. We'll take a look at that. Natural gas. Oh, you looking at the futures, Patrick? Hey, Sam. Yeah, we'll go to the futures in a few minutes. I just want to let everything settle down a little bit. Oh, and by the way, folks, if I could ask you, please, if you can hit that like button, it helps me a lot with the YouTube algorithms. I'd really appreciate it. Thank you in advance for doing that. Subscribe to the channel. Click that bell button so you get alerted as to when I go live. And if you want to get a 15-minute alert of right before I go live sent to you, in the description area below on YouTube is a email link. Just enter your email address and we'll send you out that 15-minute alert. We hate spam too. You're not going to get spammed. We don't share information or anything like that crap. All right, let's get to what else do we have to go over here. We covered the currencies. I want to talk about Japan. Japan is very, very interesting from a contrarian perspective. Good to hear, Patrick. Very lovely lady. Okay, so Japan. This is a quarterly chart, folks. And remember that Japan has been in a quagmire of nothingness since 1998. Really before that. Back to the 80s. And what you're seeing here is a major, major breakout on the EWJ. This is the Japanese ETF issued by iShares. And there's a leveraged ETF as well. I'll be discussing that with members as a potential long trade. I don't know if they trade options on that ETF. I like to sell covered calls for those that don't know. And if they sell covered calls, or I'll write puts against the position as well, or I'll write a put rather than purchasing outright. If it's too far extended, I'll just sell puts and I'll have them put to me, and that's how we'll enter that trade. Because we're a bit extended here on the EWJ, but I love this breakout on a quarterly basis. Everything is aligned perfectly. RSI rising, Stokes are rising. The only thing I don't like at current, but the month is still young, right? So volume is trending lower quarterly, sequentially. Now, from a very, very close-up perspective, using a daily chart, we're going to pull back here. I wouldn't go buying these shares right now. I wouldn't even sell puts right now, hoping that they could put to me, because we're extended. We're leaning into that third standard deviation Bollinger Band. If you're going to write puts, try to write them down at the 59, 50 level, thereabouts. I don't know what increments they sell these in, whether they do weeklies, monthlies. Good volume on Friday. This is not a bad chart. The only thing I don't like is that the shares are trading up into that third standard deviation Bollinger Band. That's not going to last. It's not supposed to be there. Beautiful higher lows here. So we're going to be looking at Japan more and more in terms of their currency, in terms of their stock market, and we will probably be getting long fairly soon. Members, more to come. I have a bunch of stocks I need to get to. Tom, you had TNX. Oh, you're talking about the Treasury note. All right. Yeah. Let's throw up yields here. Before you take a look at that chart, if there's one big concern that I would have with this market, and Tom, you brought up bonds, so I want to talk about the yields last week. This is the 10-year yield, and this is a major setup here in the making. We had a nice consolidation out along the, let's call it, 1.73 support level. And last week, we flashed a bullish key reversal bar, and we closed right at resistance. So if you're wondering what could take this market down, is that if we break out above this upper band of resistance and we flash into a two-handle on yields, it's going to be a problem for the market. I'm going to go over those, Tom. I got them on the list. TNX, yeah, weekly view, it looks bullish. UWT, I didn't get to yet. I'll go over GASO as well. JPNL, that's a Japanese leveraged ETF, I guess. Oh, it's Direxion. Okay, cool. This is why I love the live streams. Oh, beautiful week last week. Look at this. On volume, no less. So we had an outside reversal week. Thanks for this. Appreciate it. So we had a outside reversal week, a bullish key reversal bar. Beautiful stuff. Okay, so we broke out here back in September. The always reliable pullback and a retest, bullish key reversal bar, off to the races. I regret not having seen the Japanese markets a couple of months ago. But it's not too late. I think there's a lot of upside potential here, especially when you go back and you take a look at that quarterly chart. Think about if we break out to new multi-year, all-time highs, how much upside potential there is on this trade. So I like this trade a lot. Thanks for bringing this to my attention, this ETF. And you said that it's optionable. And you are absolutely correct. It is optionable. Cool. Okay, let's go to so the 10-year Treasury note last week had a good week. Now, here was our breakout a few weeks ago. Back in October, broke out, pulled back, did a retest. Let's throw up our... All right, so you can see that we are... They tried to take it down last week. They managed to rally it back and close above support. Critical price action last week. Very nice chart. Let's throw up some monthly overlays here. For those not familiar with this charting software, it's TrendSpider. You could stay on a weekly chart and overlay monthly support and resistance levels. Not much happening on the monthlies. We'll take them off. So TNX looking interesting. to the long side. Let's go with, Tom, you were looking at X as well, right? Didn't you request that? X broke out. Got a lot of resistance above here. Right at that 14.07 level. You get a close above that level on a weekly basis. We're probably coming up here to, let's say, $16 per share on letter X. Daily chart. Yeah, it looks like we're probably going to break out here. Let's overlay the weeklies on top of this. Look at all this congestion that's in the rearview mirror. That's cool. Let's throw up the monthly overlay. What the hell just happened? Okay, not much happening here. All right. So U.S. Steel looking good. Looks fairly bullish moving into the new trading week. A little bit of topping action on Friday. But that's expected. You have resistance above there. What else do we have? UWT. That's not right. I don't know what happened there. There we go. Weekly chart. Now, I'll tell you, one of my favorite sectors for the coming week is the energy sector. What a volatile week last week. Nice reversal bar last week. Here's your upper band of resistance right here. You get a close above, let's say a 13 handle on UWT. That would be a nice buy signal. Just making a reminder for myself here. And keep this active for a few days. We're good to go. Set it and forget it. Daily view. There's the alert. So we're at resistance. I would wait for the breakout here. But it's looking good. Nice consolidation. Am I bearish on the financials? I can't say that I am. I went over this last night with yesterday with members on the week ahead commentary, and there are a couple of stocks that, and I did this on best stock charts as well for Goldman Sachs. Let's bring up Goldman Sachs. Goldman is looking outstanding. If you take a look at it on a monthly basis, it looks really, really nice. We have a breakout here, weekly basis. A bullish Q reversal bar last week. So the banks are telling us something, and it's not necessarily the best thing for the overall market. Because if the banks are rallying, then you have a lot of speculation out there that yields will probably move higher because that helps the bank's NIM, net interest margins. So if yields are pressing up higher, the stock market doesn't want anything to do with rising interest rates. They'll freak out. So the market's telling you something, the bond market's telling you something. There's pressure to find fair value on yields. And unless the Federal Reserve steps it up even more in terms of their buying to keep a lid on yields, yields are just going to continue to press higher. And Goldman Sachs is definitely going to be a beneficiary of them. And if you take a look at the XLF did very well last week, bullish key reversal bar. Broke out. Taking a look at the regional banks. What the hell happened here? Well, the regional banks, take my word for it, they had a good week last week too. Oh, this is the wrong symbol. DPST. Here we go. Good week last week. We broke out on the regionals back here the week of the 28th of October. Pulled back, higher lows. Looks like we're going to press higher here. So I can't be bearish on the financials. Not when I see yields poised for liftoff. Because remember, this chart here. Where is it? Ten-year yield, weekly basis. Look at that pop. And if you overlay, let's do this to illustrate my point. We'll put the banks overlaid versus the 10-year yield. We'll make it orange. You can see the banks are having a great year, but when did they start taking off? They started taking off in earnest. This new breakout right here when we bottomed out back in September on yields. So as we press up on yields, the banks are moving up higher as well. And you can see they trade in tandem with each other. When yields pull back, the banks pull back. When yields move higher, the banks move higher. It's an undeniable uptrend or undeniable correlation. Here's a monthly view. Clear and defined correlation between the two. So if you get a breakout on yields, as it looks like we may, the banks are going to continue to do well. You know what? I can't continue. 40,000 just made a comment that can't see yields heading higher. The yields should be higher. They're artificially low right now. So unless we get a very, very proactive Federal Reserve going in and being the buyer of last resort to keep bonds, keep a bid under bonds, therefore pushing the yields downward, you're going to see if the free markets have their way, they're going to take bond yields higher. And it's only a matter of time before the Federal Reserve is forced to act. I don't think that any breakout, if we do get the breakout on the yield, is going to hold. The reason is that we're bankrupt. The United States is bankrupt. People don't realize this. The average consumer is bankrupt. Everybody's bankrupt. The problem is we just haven't been hit with the bill yet. And that bill is going to come when yields go to seek fair value and we have to pay market rates on our $20 trillion in rising in debt. Good luck with that. Those interest payments will meet or exceed the budget for our defense. That's how big it's going to be in interest payments only, not one penny of principal. Yeah, and they're weak for a reason, and it's the Federal Reserve manipulating the bond market. It's, what is fair value nowadays? Who knows? And you've also had a lot of problems over in Europe, and you've had capital flights into the United States as a safe haven. You've had ZIRP. Zero interest rate policy. We haven't had that here yet. So you saw all that money flowing into the United States, but these other countries are beginning to wake up and they're kind of backing away from that zero interest rate policy because they realize it doesn't work. So what happens? It's showing on the currency market. Take a look at The euro, it's poised for a breakout here. It may break out. I'm not saying it will, but it looks good. The Japanese yen. I lost that chart. Where is it? Here it is. The Japanese yen pushing up higher relative to the US dollar. So I think that money flows, which have been helping the United States into the bond market, keeping the lid, helping out the Federal Reserve so they don't have to be so proactive. I don't think that we have that wind at our back anymore, and the Federal Reserve is going to have to step it up and step it up really, really quick. What time do we have here? 6:35. We're going to wind this down and go into the members group inner circle. And folks, if you haven't hit that like button, if you could please do that, I'd really appreciate it. Thank you very much. And we'll leave off with Gasol. And members, we're going to be going to that inner circle session at 7 p.m. sharp. Have your symbols ready. Good week last week on Gasol. The trend is still down. I know they do have options on Gasol. So you have resistance right up here at 7. Let's call it about $7.50 per share. RSI is putting in higher lows. And we have broken out. So we broke out an RSI back here in October, yet the share price continues to press downward, and we hockey sticked up last week. So watch for a new high on RSI. RSI is sending a signal. You're also seeing higher lows on the slow stochastic weekly basis. So watch for a breakout here on GASL daily chart. Nice day on Friday. We had a breakout in time, meaning we broke out on Thursday. We retested on Friday, outside reversal day on Friday. I think we're going up higher here. Here's your upper band of resistance. I think a safe price target here is about $6.81 per share. I may look to sell puts on this to just generate income. Sorry about that for hitting the mic. Just to generate income, selling puts on GASL. And if the shares are put to me, so be it. They'll be put to me. So GASL is looking good. I'll share this link with you. Okay, and with that, folks, I am going to say goodnight to everybody. Again, if you could hit that like button, I really appreciate it. We have a whole bunch of likes up there. Thank you very much. And members, we're going to segue over into the members private group session, and I'll take some chart requests there. You're welcome, Tom. And everybody have a very, very profitable week. And again, thanks for spending your Sunday with me. And don't forget to subscribe to the channel. I appreciate that. Have a great night. Talk to you soon.